Hi, everyone. Hope you can hear me okay. And welcome to today's panel discussion on the important topic of how to build and optimize successful teams, how to select the right investors to optimize for success at the early stages of the fundraising journey, and also why team is so important for investors when analyzing early stage investment opportunities. So before we dive into the discussion, we're going to do a quick fire round of introductions from our panelists, who are founders-turned-VCs, serial entrepreneurs, and seasoned investors, giving you all viewpoints on this topic. So I'll kick off. Hi, everyone. My name's Louis, and I'm an investor with InMotion Ventures in London. We're the venture capital arm of Jaguar Land Rover and invest globally, pre-seed to Series B, across climate tech, industrial tech, and enterprise. Over to you, Anna.
Thank you. I'm Anna, and I am working at Norskin VC. We just closed our third fund of 320 million euros last week, and we are investing over whole of Europe, seed, Series A, a few pre-seeds, and some Series B as well. Normally 1 to 6 million euros. Yeah, it's about that. Impact, only impact.
My name is Mark Dowds. 5 times founder, 3 times VC. Today I'm representing the founder side of the business, and so my company's called Responsible. Ultimately, we build algorithms to predict the resale price on marketplaces like eBay.
Good morning, everyone. I'm George Mensah. I'm a principal at Shore Valley Ventures. We are a VC firm investing in early-stage AI companies across the UK and Ireland. We actually started out in Dublin in 2017. We're currently investing across both markets. I've been a VC myself for 6 years, and I've worked across my career in the capital markets, and looking forward to speaking about how to identify scaling teams today.
Hi, everyone. Good morning. My name is Brendan Rogers. Previously, I was co-founder of a company called WAG, which is the largest pet marketplace in the United States, which went public last year on the NASDAQ. Now I focus my time investing in India. So I'm a founder of a fund called 2AM VC. We invest in pre-seed seed companies in India, founders building in India for India, and building in India for the world.
Brilliant. Well, let's kick off from the VC side of the table. George, looking at you, how do you identify high-performing teams as an early-stage investor?
I think a key quality in a high-performing team is a high action bias. So between when there is a challenge or a problem and their ability to respond and adapt to that problem, there's a short lag between that. That's a really, really key characteristic that I look for. In terms of personality, I think I always say you need to have, as a founding team, you need to have a high level of both arrogance and humility. Arrogance to believe that you can really disrupt a market because it's a very hard thing to do, and actually it's quite an illogical thing to do. And for many founders, the opportunity cost of doing that's quite high because they could probably take a high-paying job elsewhere. But also the humility to know that you can't do that by yourself. You can't do everything by yourself. And as you scale, you need to feel comfortable to delegate responsibilities to other team members, and also lean on your investors and your advisors to help you go through challenges. In terms of our fund, because we focus on AI companies, what I'm really looking for in a team is across the founding team, looking for a good balance of commercial and technical skill sets. So the CTO doesn't just focus solely on software building and products and engineering, but actually they can have discussions and they can understand sales cycles and how to build a sales funnel. And similarly, the CEO, not only does he or she need to be a visionary in terms of commerce and sales, but they also have to have technical chops as well. And we found that the teams that we often back, there's a good overlap in terms of commercial and technical skill sets.
Amazing. And Brandon, would you agree with that takeaway? I guess you're in the unique position of experiencing success, both as a founder and also now as a partner in a VC. Do you take a differentiated view, or do you agree with what George has said?
No, I totally agree. Sorry, it's a little loud. But no, I totally agree with everything that you mentioned. Yeah, sorry, I still can't really hear.
Okay, I can repeat. As a successful founder and also now a partner in a VC, do you take a differentiated view having both sides of the equation?
Yeah, so I think like as a VC, you know, you as a founder VC, it's you have to find exactly who to look for, and operating experience. I believe at the earliest stages is going to get you from 0 to 1. So, for an example, when I was raising for my first business, you know, there's obviously a lot of capital out there, and you know, capital only can take you so far. But you really want folks that can actually provide value and move the needle and get you from that 0 to 1, so you can get to that Series A as quickly as possible.
Amazing. And Mark, I guess we've heard from investors so far. From a founder's view and a serial entrepreneur, what do you look for when hiring top talent? And also on the flip side, how do you retain that talent as you scale as a company?
Yeah, look for folks who hustle at the very beginning, and folks that are not necessarily attracted to any form of title, because the adaptability, especially at the very beginning, if it's pre-seed, seed, you've got an idea and the thing's going to evolve, and you want to have people that can shift and have a really sort of flexible skill set if possible. But the hustle is sort of key. Certainly for me, as a founder, I want someone who can get up and go, get the stuff done, and I can steer, but I don't want to manage. So it's folks that you know that you don't have to worry about what they're doing. In fact, it's better to have someone that's going to take a risk and do something that can be corrected afterwards than those who ask for permission to do everything. So it's because at that stage, I mean, it allows me to do my job without having to sit and manage or give out tasks on a daily basis. So definitely the folks that really are keen. And I tend not to hire folks from big companies. I've made that mistake several times, and I've pretty much been burned. So a lot of folks that have been in the big company get sort of used to delegating tasks to others. So I look for people that are okay to roll the sleeves up and do it themselves.
Amazing. And Anna, one for you. When sourcing opportunities, especially at the pre-seed or seed level, what emphasis do you place on the team versus market size or initial traction?
Yeah, so at that stage, we place tremendous weight on the founders specifically, and then what team that they can build. But the founders is what we're placing our bet on, and if they can actually solve what they're trying to achieve. The product comes like second, or whatever they're trying to do. Yeah.
Amazing. So I think it's clear from all your answers that people play an instrumental role in the likely success of a company at the early stages. I guess if we move towards how important is alignment of vision between the founders and investors that they bring on, and let's start with you, Mark.
Yeah, I think alignment with your investors is very key. I mean, for me, when I'm looking for investment, I'm interviewing the partner as much as the firm, because if they're going to sit on my board, they're on my team. So I want to make sure that there's good alignment and personality, that I want to actually really get to know the person and want to know that I enjoy it. And also want to know that the alignment of the fund matches the timing of my company. So one of the key questions I ask when meeting a fund is sort of what's the vintage? You know, if someone's deploying still out of year 4 out of a fund, and I'm at the very early stage, all of a sudden I know they'll be breathing down my neck in 5 or 6 years whenever I'm maybe at scale, so I want to have a little bit more wiggle room. So I want to know that it's an earlier stage fund in the first couple of years, especially when I'm at the earlier stage. So I think the alignment on timing as well as personality are key.
Yeah. And George, at Sure Valley Ventures, how do you build rapport and a strong relationship with the founders in your portfolio, and why do you think that's such an important aspect of what you do?
I think it's to be truthful, it's quite easy for us to build a rapport, and the reason why I say that is because before I joined Sure Valley, one of the big things for me that attracted me to the firm was I'd been able to speak with the team over 6 months and just really bonded with them as people, regardless of investment thesis, etc. But I felt very comfortable that I could flourish in this team because I got on with them as people, and that still stands true today. I think in terms of both portfolio companies and founders that we're looking to bring into the portfolio, we try and get to know them as people. That's very important. What motivates them, understanding where there's some overlap in terms of previous experiences. We're very social people, so it's easy to build those relationships. But in terms of bringing founders into the portfolio, one of the things I try and focus on is adding value before we've even put a check into the company. So that might be an introduction to a potential customer, it might be an introduction to an angel or another VC or an operator who might potentially become an employee. And I found that's worked quite well for me in terms of winning deals. We're often competing against VC firms that have maybe more funds and perhaps a bigger brand, but often we're able to win deals because of the relationship between ourselves and the founders. So I think adding value before you take value is actually a way of winning.
And one for you, Brendan. The growth at all costs mentality of some VCs can be quite damaging, putting that pressure on early stage companies. Do you think certain market conditions, such as the recent downturn, influences what type of investors founders look for in those conditions?
Yeah, I think that in these market conditions, capital, the bar is a lot higher. I think that 2020, 2021 was not grow at all costs era, but like capital was just so easy to get. Now as a founder, if I was building a business right now, I would try to bootstrap it as long as possible, and I would try to bring on angels that can provide value from day one, and not just capital, but it can actually get me to the traction and level that VCs, specifically pre-seed seed, that are looking for while writing a check, and build those relationships with those VCs as early as possible. So I like to say when you ask for money, you get advice, but when you ask for advice, you get money. And there's a lot of truth to that. So what I would do is, in these market conditions, I would go on LinkedIn. First I'd go on Crunchbase. If I was a founder, I'd go on Crunchbase and I'd find all like the startups maybe in your area or in your sector, and look at their seed rounds and look at everybody that invested in the seed round. Then go on LinkedIn and then ping those individuals. And introduce yourself and ask for advice and just start cold messaging people, and build the relationships with the VCs early on, build the relationships with the angels. All you need is just one cheerleader to allow you to get access to everybody in their networks, et cetera. In these markets right now, traction and profitability and making money is everything. And data doesn't lie, and even if you have worked at a really great company before, or maybe you were a serial entrepreneur, or maybe you have a great background, you're super educated, VCs probably will overlook that. Traction, transactions, et cetera, is what's going to get you to allow you to get that first check.
Amazing. And I guess one for you, Anna, with competition for deals, especially in climate tech in Europe, heating up, how important is a truly differentiated platform offering? How does Norskin ensure that it wins competitive deals?
Yeah, it's been heated for a while now, but yeah, we've been investing in climate for a very long time. So we were founded in 2016. We've been in the game for a long time, but also Norskin is built on a foundation from the beginning. So we have a house, which is a sort of an impact hub in Kigali, Rwanda, in Barcelona, in Stockholm, and now we're going into other countries as well. And that sort of network of both founders and investors makes it very attractive for founders, especially within impact, because they reach so many people and they have so many specialists. So that is definitely something that we're working on. We also in-house have like CMO helping our recruitment and impact, chief of impact, and making sure that we're aligned and complying with SFDR that we need to do. So yeah, the network effects, definitely.
And I guess, Mark, would you agree with that? When you're looking to bring on investors, it's not just capital that you're looking at. You're looking at a broader offering of how that VC can help you grow the company. Would you agree with that?
Yeah. My largest investor today is Barclays. So they have a fund called Sustainable Impact Capital. And part of my evaluation of that was the reach that Barclays have to the average consumer. So they're also like this year, they're one of the main sponsors for Wimbledon, and so they're able to sort of work with us to give us lots of exposure as well. So also the clout that comes with a name like that, so to bring in other investors in behind. So that's definitely made a big difference, or one of the reasons I chose them.
And Brandon, would you agree with that? You've taken a company all the way through to being listed on the NASDAQ. Very impressive. What was your due diligence process like with investors? Why did you choose to bring on specific investors, again, over and above the capital?
Yeah, and thank you for the kind words. The WAG process was obviously very interesting. We raised close to $400 million. The process that we, while raising capital, at least when I was a founder, was, like I said earlier, at the earliest stages, you want people that can provide value rather than money. Money is completely irrelevant. It's about how can you bring on people that can get you from 0 to 1 and help you move as quickly as possible, because at pre-seed seed, the only thing that matters is speed, because you don't want to get into Series A, or basically the valley of death, as we like to call it in India, is like you raise a seed round and you can't get to Series A because your metrics are horrible and no one's going to write you that check because of that reason. You want to find people that are going to stay up with you all hours of the night to get you to that place. And then once you start having traction, once you start making revenue, the next kind of the Series A and beyond is when you want to bring on technical partners, specifically board members, that can strategize and help you with introductions to partners or whatever the case may be, help you really scale the business to get you to a place where then you can start raising larger and larger checks. And again, it's all about speed. It's all about how much money can you raise as quickly as possible, and get as big a scale as possible, because we're not looking for 5Xs, 10Xs. Like, I'm looking for 1,000X. I want to invest at a sub $10 million valuation, and I want it to be $10, $20 billion business. So you need to raise capital for that, and you have to move super, super fast. So that's the mentality that I took when I was a founder, and I'm taking that now with my founders, is where if I get an email update and they say they have 45 months runway, I'm like, what are you doing? You got to spend the money. You got to move fast. You got to move fast. So really, really try to find partners at the earliest stages that will help you get to that 0 to 1, and then really find partners moving on that can help you strategize and scale the business as quickly as possible, so you can get in front of and have as large a TAM as humanly possible. So, yeah.
I'm going to have a quick follow-up here, Brandon, based on what you said. When should a founder walk away from an investment discussion?
Have I walked away from investor discussion?
Yeah, when should they know to not take certain capital?
So obviously the terms, you have liquidation preferences, valuation may not be aligned. Sometimes investors, I'm not really sure how they do it in Europe, but they may invest in tranches, which I think is completely BS, because that's going to tie the founders' hands behind their back. So the things that I would look out for is obviously terms, like really, really ironing out the terms. Also, with your co-founders, making sure that your agreements with your co-founders are all kosher. And if the VCs are really trying to put liquidation preferences on you, which usually happen later on, I'm sure you guys are aware of that, liquidation preferences, but the liquidation preferences can really hurt you later on as, if the company doesn't do as well as the investors would like. And also just good people. This is a marriage. We're not in this, I'm not investing in founders to have a 2-year relationship. I want to be ringing the bell, the Bombay Stock Exchange, with my founders 12 years from now. So it's like, I want to be with people that are cool, that like I like to go out with, that I can call up at 2 a.m. and vice versa. So when I was a founder, I looked for people that I actually wanted to be in a marriage with, because this is what I do 24/7. This is my whole life, and that's their founder's whole life. So you want to make sure that you have a really great relationship. And if the deal doesn't fit right, walk away. And the last thing I'll say is that every decision I've made in my life has been with my intuition and with my gut. And the gut never lies, and for whatever reason, if it doesn't feel right, walk away. There's nothing wrong with that. There's a lot of money in this world, and it's not just in Silicon Valley.
Thanks, Brendan. One for you, Anna and George. How important do you deem diversity and inclusion in building high-performing teams from what you've seen in portfolio companies?
I would say it's critically important if we're looking forward. The world. There's a lot of talk about globalization, but I think if you want to build a startup that is going to scale globally, you need a team that is diverse in their experiences and perspectives, because it will allow them to see things that a more homogenous team might not. I think we're very fortunate at the moment. A lot of the best founding teams that we're meeting are highly diverse. One, in terms of their experiences, two, in terms of their ethnicity, gender, and there's just something special about having a diverse team, in my opinion, that will allow them to deliver products and services that perhaps a more homogeneous team might not. I think there's been a lot of conversations over the last few years, sort of post-pandemic, that have allowed diverse teams to access more capital, and I think in terms of direction of travel, it's very positive, but there's still a lot more work to do. And I think as someone myself who comes from an African background, I feel very privileged to be able to deploy capital into founders of diverse teams. So very excited at that opportunity, but again, there's still more work to do.
Amazing. Anna, would you like to share your thoughts on that topic too?
Yeah, I have nothing to add, really. But having diversity through the whole investment process, but on our side as well, so within the investment team and on the VC side, makes you look at other companies, and you get a diverse sort of inflow of deals as well. So just having it in every single part of the investment journey, from the VC to the or whatever investor vehicle you're using, to the founders and the team that they're building, is crucial to succeed, I think.
Amazing. I'm going to squeeze in one more question for you, Mark. How do you foster, as a founder, a culture of innovation within your team?
First of all, leading by example. So recognizing what's going on in the industry, being aware of everything, and bringing those ideas to the table, but also taking risk with people. There's a lot of folks that bring ideas to the table, and I let a lot of people run with them. So, because in some ways, for me, I'm very open about owning my own mistakes, and so I like to create an environment where others can make them. Anytime when someone fails and comes back, I remind, if they're feeling bad about themselves, I remind them about the bigger mistakes that I've made in the company, to give them a little bit of peace, but sort of encouraging that sort of fail fast, and also to recognize that failure is only feedback. So the more that we do it, the faster we learn, the better we become.
Amazing. I think we've hit time now. Clock's gone red. But I just want to thank our amazing panelists for sharing their experiences on navigating the investor landscape, building successful teams, and attracting the right backers. So thank you, everyone, and I hope you enjoyed the session.